If you're in the market for a mortgage and you're doing some research online, you're probably seeing that there are a ton of mortgage calculator options out there for you to choose from. And you might be wondering, are there any important differences between them? Is one better than the others? Does it even matter which one I use? Well, I've looked at plenty of them, and in this video, I'm going to show you two of my favorites. One of them is a simpler, more straightforward option, while the other one has a few more bells and whistles and even gives you the option of comparing multiple mortgage scenarios at the same time. And stick around, because later in the video, I'm going to show you why I actually think there's a benefit to using both of these calculators together. Welcome to the channel. Now, if you're new here, my name is Jason from the Bondy-Sawyer real estate team here in the city of Toronto. I've been helping buyers and sellers make smart real estate moves since 2006. If you ever want to book a call with me, you can do so using that first link down in the description. Now, if you find any value in this particular video, go ahead and hit that like button and subscribe to the channel if you haven't already. Just a quick note before we get started, we're going to be talking specifically about Canadian mortgage calculators. Well, why does that matter? Well, in other parts of the world, mortgages are calculated a little bit differently than they are here in Canada. In the US, for example, mortgage interest is typically compounded monthly. This means that each month interest is calculated based on the current principal and any interest that has accrued in the previous month. Whereas in Canada, mortgage interest is typically compounded semi-annually, so every 6 months or twice a year, as opposed to every month. The difference in compounding might seem subtle, but it can lead to noticeable differences in total interest over the lifespan of a mortgage. So if you're getting a Canadian mortgage, you definitely want to be using a Canadian mortgage calculator when you're running your numbers. Okay, let's get into it. So the first one I want to take a look at here is from the Government of Canada's website. So here's the URL. Now, it's not very pretty, is it? Don't worry, I'm not going to ask you to memorize this jumble of characters. Instead, I'm just going to include a link to this page down in the description. So one of the things that I really like about this particular calculator is just how clean and focused it is compared to some of the other options out there. Some of the other options are a bit more cluttered on the sides or at the top or bottom, with links to other web pages, FAQs, advertisements for different rates for mortgage lenders, etc. Whereas this option keeps things a bit cleaner, which I think actually makes this an especially good calculator for someone who's maybe not so familiar with how mortgage payments are calculated, and they really need to have the info presented to them in a relatively uncluttered way so that they can just focus on the numbers and start to develop a better understanding of some of these mortgage basics. On the left here, we have a section for payment plan, and this is where you're going to enter your mortgage amount, interest rate, amortization period, payment frequency, and your mortgage term. And here you're seeing another feature that I really like about this particular calculator, which is the ability to click on any one of these question mark icons, which then open up to show you some additional information. So by default, the additional info is sort of neatly tucked away, but it's very accessible when you need it. And again, going back to my opinion that this is a good calculator for someone who's maybe not so familiar with how mortgage payments are calculated, if you just spend a bit of time working your way through this calculator, clicking on each of the question mark icons, you're essentially getting a crash course on mortgage basics. On the right here, we have a section for prepayment plan. Now, if you're not familiar with this, a prepayment option allows borrowers to pay off part or all of their mortgage principal before the end of the loan term. This is usually without incurring penalties, or if there are penalties, they are reduced depending on the mortgage term. So this can help reduce the total amount of interest paid over the life of the mortgage, and it can shorten the loan's amortization period. So you can see that this calculator gives you the option to add in a prepayment amount, prepayment frequency, and the payment number at which the prepayments begin. So let's say you're buying a house for $1 million, okay? You're putting down 20%, so you're getting a mortgage at $800,000. Let's say you're getting an interest rate of 5% with a 25-year amortization. You're gonna go with monthly payments, and you're gonna do a 5-year term. Now hit this calculate button down at the bottom, and then you're given a calculation summary table, which shows you the numbers at the end of your term here on the left, and then the numbers at the end of your amortization here on your right. And then you can see there the same info is presented in written form just below the table in the mortgage summary section. And this summary also includes your mortgage balance at the end of your term. Next, we have a payment diagram section. So most mortgage calculators have some sort of visualization tool, often a graph where you can see how much your mortgage principal is decreasing over time. Some of them even show you the ratio of principal to interest for each payment and how the ratio changes over the course of your mortgage term and or the amortization. Because if you're not already familiar with this, a greater portion of your mortgage payment goes towards interest at the beginning of your mortgage. And then as time goes on, less goes towards interest and more goes towards principal. Now, the visualization tool on this particular mortgage calculator is not great, in my opinion. I would say it's probably the weak point here for sure. I mean, it's not very detailed. It's not at all interactive. And when we move on to the second calculator in this video, you're going to see what it looks like when the tool is interactive, and you'll understand how much more useful that actually is. Now, finally, at the bottom here, we have the ability to create a summary report. And this report brings together all of the data that we've looked at so far. Plus, it gives us a very detailed payment schedule. And this payment schedule is another one of my favorite features of this particular calculator. Now, most payment schedules only show you the numbers for each year, whereas this one shows you the numbers for each individual payment. So with our example here, we're doing monthly payments. So the payment schedule shows us the numbers for each of those 12 monthly payments, plus a summary for the entire year, plus a summary of where we stand at the end of our term. So in our case, we chose a 5-year term. Plus it goes on to show us the numbers for every single payment for the remainder of the amortization as well. Now, I personally love how detailed this schedule feature is, because when you take the time to go through these numbers, you really do see the progression over time, right? And you see of how much interest you're paying in relation to how much principal you're paying. And again, this goes back to what I said here a couple times already, which is that I think this is a great calculator for someone who's trying to learn and get a better understanding of exactly how mortgage payments work. Moving on to my other favorite mortgage calculator now, this one is from ratehub.ca. Here's the URL. Again, I will include a link to this page down in the description. So even at a quick first glance, you can already see there's a lot more going on here visually compared to the Government of Canada's website. You've got these links on the right-hand side. You've got ads down at the bottom. You can see there's a video, there's drop-down menus with FAQs, links to other calculators, another video, and a whole bunch more links. Now, a lot of this stuff is actually useful information, but it's also arguably a bit overwhelming, right? So depending on what your preferences are, you might see all of this additional info as a pro, or you might see it as a con. With the Government of Canada's calculator, the first one we looked at, you start by entering your mortgage amount. This calculator here works a bit differently. You start by entering your purchase price and the city in which you are buying. And we'll get to why the city field is important here in a minute. And then it auto-populates with 4 different mortgage scenarios, each with its own down payment amount, its own mortgage amount, amortization period, interest rate, payment frequency, etc. And if you want to, you can go ahead and change any of these fields so that you can customize any of the 4 scenarios. And I love this feature because once you have a decent understanding of how mortgage payments are calculated, you can really start to play around and expand that knowledge by comparing and contrasting a bunch of different scenarios side by side with one another. So I typically like to start by having all 4 scenarios set up exactly the same. And then I just go in and change one variable to see how that affects things. Going back to the same example we used with the other calculator, let's go with $1 million purchase price, 20% down, 25-year amortization, monthly payments, and a 5% interest rate. Now, when changing interest rates, you can see that this here is another example of how this calculator does more than what the other one does, right? This one actually shows you the current rates being offered by a bunch of different lenders. You can choose any one of those rates, or you can simply enter your own custom rate. So we'll put 5% for each of them. Now you can see that all 4 mortgage payments are the same, right? Okay, so let's see how those mortgage payments are affected when we go in and change the amortization periods. So we'll decrease this one to 15 years. We'll decrease this one to 20 years, and we'll increase this one here to 30 years. So with keeping all other variables the same and just changing the amortization periods, you can see how each of the mortgage payments are affected. From there, you could reset the amortization periods back so that they're all the same and play around with another variable. Interest rates, for example, or you could change a few of the variables and see how those affect the payments. Basically, there's a bunch of ways that you can slice and dice the 4 scenarios. Now, as we work our way through the calculator, you can see that just like with the other calculator, this one also has these little question mark icons that you can click on to reveal additional info. Now, down at the bottom of this section, we have an area that pertains to land transfer taxes, and the other calculator didn't deal with this at all. On the left, you can select whether or not you're a first-time home buyer, and you can see that the tax amount changes based on what we select there because of the first-time home buyer rebates. And if you remember at the top of the section, we started by entering the city in which we are buying. And this is because in the city of Toronto, there's an additional municipal land transfer tax that factors into the equation. So that will be reflected here in the results as well. Next, we have a whole other section dedicated to cash needed to close. On the left here, there's a drop-down menu that allows us to select any of our 4 mortgage scenarios. And then on the right, we get a detailed breakdown showing not only the down payment and land transfer tax amounts from above, but you can see there's also lawyer fees, title insurance, home inspection, and appraisal fees. And you can go in and enter any custom amounts that you want into any of these fields. Now, if you select condo on the left, you also get an additional field here on the right for your status certificate, although here it's called an estoppel fee. Next, we have a whole other section dedicated to monthly expenses. Again, on the left here, there's a drop-down menu that allows us to select any of our 4 mortgage scenarios. And then on the right, we get a detailed breakdown showing not only the mortgage payment, but also property tax, any other monthly debts, utilities, property insurance, phone, cable, internet. And then if it's a condo, you get an additional field there for monthly condo fees. And just like everywhere else in this calculator, you can go in and enter any custom amounts that you want into these fields. Next, we have a section dedicated to interest rate risk. So it shows you how much of your mortgage principal is going to be left at the end of the term. And then it calculates the mortgage payments that you could potentially encounter at renewal based on different interest rates. So below that is a graph here, and it displays the approximate values of competitive 5-year fixed mortgage rates since 2006. So in other words, they're looking back at what has happened with rates over the last almost 20 years to hopefully give you some insight into what could potentially happen with them in the future. And then finally, we have a section dedicated to amortization schedule. On the right, there's a drop-down menu to select one of the 4 mortgage scenarios, and then you can drag your cursor across this interactive graph to see how much interest and how much principal you're going to pay each year. The blue bars are interest, the green bars are principal, and this yellow line here is your mortgage balance at the end of each year. Now, as I pointed out earlier when we were looking at the other mortgage calculator, the visualization tool there was just a static graph, not very useful at all. This one here is much better. You can see it provides quite a bit more value. Now, below the graph is a breakdown that lays out the same info that's in the graph, but it also gives you the totals at the end of your mortgage term. And then it continues on to show your annual numbers for each year going forward until the end of your amortization period. So this is all great, but remember, the government's calculator goes even further and provides the numbers for each payment period. So if you're making monthly payments, for example, you'll see the numbers for each month within the year. So you can see that each of these 2 mortgage calculators has a lot to offer. And I actually like to use both of them together when I'm running mortgage numbers for myself or for a client. I typically start with the government's calculator. I'll plug in the numbers that I think most closely match what the mortgage scenario is going to be. And then I find the calculation summary and the mortgage summary to be very clear and easy to digest. And then from there, I'll play with the RateHub calculator, just to do that side-by-side comparison of a few different scenarios and use that graph to bring in a visual element as well. If you're looking to make a move, there are a few other videos here that I think you're gonna wanna take a look at. Over here is a link to subscribe to our channel. That's it for now, and I'll see you next time.